This is Alan Farley from FX Empire. Starbucks was engaged in a very strong uptrend into 2015 when it topped out in the mid-60s. That was a really tough level for the stock, as you can see from a failed 2017 breakout and then a 2018 breakout that took months before ejecting into a very strong trend in 2019. Stock topped out once again in 2019 just below the 100 level and then entered this very steep correction, cutting through the prior breakout support during the pandemic decline and then remounting that level, making this a successful test of the $60 level. The recovery through to 2020 unfolded in one wave, two waves, and then three waves into November when it finally returned to the prior high, broke out into December, and then the first trading day of 2021, it posted an all-time high right up here at 107. Now the stock's consolidating and pulling back since that time in a rectangular or a triangular consolidation. We have a little bit of a problem here on this weekly chart. As you can see, the weekly stochastics oscillator is now engaged in a sell cycle. This is going to raise odds for a sell the news reaction and a failed breakout after Tuesday's earnings report. Now, it isn't a sure thing, but you got to be careful about betting against this weekly stochastic sell cycle. In addition, not on this chart, on balance volume it has never broken out above this high right here. It came right back to that prior high at the top of this breakout. So we have a little bit of resistance going on with volume as well. So I think you have to be a little bit cautious into the report, especially because this is a restaurant stock and we're in the middle of the pandemic second wave, and the vaccine rollout has been pretty much of a disaster in the United States so far. So I think if you're going to jump into this stock, you need to be realistic about the fact that we could get a failed breakout and then get this gap filled at around $90.